As 2026 begins, the world's eyes are on China, not for a crisis, but for a bold new strategy. China's 15th five-year plan is more than an economic forecast. It's a declaration of intent to reshape its role in the global order. The leadership is pivoting from growth at any cost to what they call high-quality development, focusing on strength, innovation, and self-sufficiency. This plan is a response to recent global turbulence and the realization that the old economic model has run its course. China aims to build a modern industrial system, mastering the entire value chain, from research to finished product. The goal: transform from the world's factory to a global leader in advanced manufacturing and technology. Forums like Davos now hear China's leaders promise stability and a new, more assertive globalization. The plan will direct trillions in investment, prioritizing industries that can withstand external shocks and drive future growth. It's a master plan for China's next chapter, one focused on technological strength and strategic autonomy. The world must now prepare for a China that is not just bigger, but smarter and more independent. For decades, China's story was about speed, double-digit growth, massive infrastructure, and booming exports. The new plan marks a shift: resilience over speed. The old model left China vulnerable, over-reliant on real estate and foreign technology. Now Beijing is playing the long game, prioritizing stability and targeted support for key sectors. Technological self-reliance is at the core, driven by the tech rivalry with the US and restrictions on critical imports. Immense resources are being channeled into domestic innovation, especially in areas where China once depended on others. The results are clear. China's exports now mean Media Group, electric vehicle assembly line in China, solar panel factory workers in China. High-speed train moving through Chinese countryside, Istaka distribute equally electric vehicles, solar panels, and high-speed rail, not just toys and textiles. In 2025, China's trade surplus soared, powered by advanced manufacturing. The new plan aims to accelerate this trend, ensuring China's economic strength is built on innovation, not imitation. The era of chasing growth at any cost is over. China is building for the long term. China's economic strategy zeroes in on a few critical high-tech sectors. Semiconductors top the list. China is investing heavily in domestic chip production, focusing on mature nodes and advanced packaging. State-funded data centers are now required to use Chinese-made CPUs, guaranteeing a market for homegrown chips. Artificial intelligence is being woven into every industry, from manufacturing to healthcare, with the AI Plus Manufacturing Initiative leading the charge. The electric vehicle sector is booming. China became the world's largest car exporter in 2025, and now the focus is on brand quality and global reach. The government is encouraging industry consolidation to tackle overcapacity and strengthen global competitiveness. Aerospace is another frontier, with major support for the C919 passenger jet and homegrown aircraft engines. China is also betting big on the low-altitude economy, drones, air taxis, and urban air mobility, with new regulations paving the way for rapid growth. These targeted investments are designed to make China a leader in the industries of the future. The message is clear. China wants to set the pace in global innovation. Despite its ambitions, China faces serious domestic challenges. Weak consumer demand is a major issue, driven by a property market slump that's eroded household wealth and confidence. Demographic shifts, an aging, shrinking workforce, threaten the old growth model and strain social systems. The government is pushing automation and productivity to offset these trends, racing to innovate faster than the population ages. Local government debt is another risk, limiting the ability to stimulate the economy and requiring careful management. Beijing is avoiding risky bailouts, opting for gradual reform and targeted intervention. Balancing high-tech ambitions with these structural weaknesses is a delicate act. The success of the five-year plan depends on navigating these domestic headwinds. China's leaders must steer a new course without destabilizing the economy. China's new strategy is inseparable from geopolitics, especially its rivalry with the US. US tech restrictions exposed China's vulnerabilities and made self-reliance a top priority. Achieving technological independence is now a matter of national security, driving massive, state-led investment. Diplomatically, China is strengthening ties with other nations, positioning itself as a stable, multilateral partner. Recent deals, like improved relations with Canada, show a pragmatic approach to foreign policy. For foreign companies, the rules have changed. Success now means deeper integration with China's policy goals and local innovation. The regulatory environment is tougher, with strict data and security requirements. Opportunities remain in niche high-tech fields, but the price of entry is alignment with Beijing's ambitions. Navigating China's market now requires a careful balance between opportunity and risk. China's transformation will reshape the global economy. As China moves up the value chain, it becomes a formidable high-tech competitor, creating friction and opportunity worldwide. Its investments in renewables and EVs are driving global adoption and lowering costs, but also increasing supply chain dependencies. A dispute or policy shift in China could disrupt markets everywhere, prompting countries to rethink their own supply chains. China's focus on innovation attracts talent and capital, forcing other nations to compete harder for their edge. Collaboration is possible for those who align with China's strategic goals, especially in advanced tech. The world must adapt to a more assertive, technologically advanced, and independent China. Decisions made in Beijing will shape the global economy for decades to come.